What's up? What's up? What's up, my Mind Your Money business folks? It's me yet again with another video on today's stock market. Well, on Friday's stock market news. I'm posting this video late. It's Saturday here. It's and normally Saturday morning is when I post my Friday videos. But I was just tired today, people. I laid down majority of the day and rested. I was gone for a couple of weeks for work, and then I took a week off, mini vacation, just a week off in Hawaii. I was just tired, and then I worked all this week, tired. So I rested today. So now I'm doing the video. So what happened today in the stock market? It says stocks closed lower, but S&P 500 notches its fourth winning month in a row. S&P 500, people. So it says stocks fell on Friday as investors took some money off the table into a long weekend following a new S&P 500 record and solid Nvidia's earnings this week. New inflation data showed rising prices was still a risk heading into the new month. Now, Nvidia was down, the stock, the S&P 500, everything was down. But like the article says, people took money off of the table. The crazy thing is, I was thinking about doing the same thing. I was thinking, maybe I should trim some of my earnings down, but I didn't. But anyway, it says the S&P 500 ended the day 0.64% lower, but still scored its fourth winning month in a row. So that means, had you been investing into the S&P 500, you would be up. You would have made some money had you been investing into the S&P, into the stock market. But specifically the S&P 500. Also, it says the S&P 500, the NASDAQ composite, shed 1.15%, and the Dow Jones Industrial Average lost 0.2%, right? So core PCE, a key inflation measure watched by the Federal Reserve, which excludes the cost of food and energy, increased 2.9% in July, in line with the expectation, but an acceleration from the prior month and the highest level since February. So the Fed opened the door to rate cuts, but the size of that opening is going to depend on whether labor market weakness continues to look like a bigger risk than rising inflation, said Zentner, chief economic strategist for Morgan Stanley Wealth Management, in a statement. Today's inline PCE price index will keep the focus on the jobs market. For now, the odds still favor a September cut. So will interest rates be cut next month or not? I guess we'll see. So given that equities were already under pressure heading into the PCE print, Bears Ross Mayfield believes the day's pullback has more to do with the market's recent performance. Stocks are coming off a winning session, with the S&P 500 closing above the 6,500 mark for the first time Thursday. So that means, there are a lot of investors that have been investing way longer than I have, and you, right? They have millions and millions and millions of dollars in the market. And this is the first time the S&P 500 has gotten up to 6,500 points. So they're trimming some of their winnings. They're taking money off the table. They can take money off of the table and buy other investments that increase in value. They can take money off of the table and buy real estate, buy that summer home, buy that vacation property. That's what you do when you invest, and you do it properly. So the PCE number was fine, but there's a bit of an earnings overhang and maybe just a little profit taking after hitting an all-time high, the firm's investment strategist said in an interview with CNBC. So even with Friday's losses, the indexes closed out August with solid gains. Yeah, even though I lost a nice little chunk of money today, I'm coming out on top for the month. So the 30 stock Dow logged a more than 3% advance in August, while the S&P 500 tallied a nearly 2% advance. The tech-heavy Nasdaq has seen an August gain of 1.6%. So the market hit new highs into a long weekend and month that has historically been poor for major benchmarks. September was the biggest losing month for the S&P 500, Dow, and Nasdaq since 1950, according to the Stock Market Traders Almanac. And the S&P 500 in particular has seen especially weak September performance over the last 10 years, per Bespoke. The broad market index averages a 0.7% decline for the month of September. So I guess we will see what happens. And that's pretty much it for the news. Not much. Not much happened. So let's see what happened in the market. Nvidia took a nice little hit, losing $5.94 today. Hold on, let me do $5.94 today, closing out at $174.18. My information technology ETF, FTEC, took a nice hit, losing $3.24 today, closing out at $207.37. Tesla took a $12.11 hit today, closing out at $333.87. Palantir lost $1.41 today, closing out at $156.71. Broadcom lost a whopping $11.26 today, closing out at $297.39. My S&P 500 ETF, SPLG, lost 46 cents today, closing out at $75.90. Meta lost $12.41 today, closing out at $738.70. Apple lost 42 cents today, closing out at $232.14. And that's pretty much it for today's stock market and what happened today. I'm actually glad now that I waited and I didn't do anything. I'm doing the video now. I'm rested. I'm actually about to go for a walk. I'm gonna go walk down to one of the resorts and relax and maybe have some more coffee. Listen to a live band, while I strategize, right? So as always, people, get out of debt. Get out of debt. Debt keeps you from investing into yourself. Debt keeps you from creating wealth. Debt keeps you from having life insurance. Debt keeps you from taking advantage of other opportunities. Debt takes away a lot of your options, to do other things, or maybe not to do anything at all, right? So get out of debt. Get out of that personal loan debt. Get out of the car loan debt. Get out of the credit card debt. Get out of the student loan debt. However, the only way you can do that is by creating a plan, and that plan is called a budget. That budget, what you do in that budget is you take the money that you have coming in each month after taxes, and then you pile up your bills, and you subtract your bills from your take-home pay, and hopefully your bills do not exceed your take-home pay. If it does exceed your take-home pay, you may want to get a better job, get a second job, figure out a way to trim down and get rid of that debt. You have to get rid of it. You have to take charge of your life, because no one's going to do it but you, right? So you create that budget, and a lot of times you will find free money, or you will free up some money. You will stop going to Starbucks. You make your own coffee. You'll stop eating out as much. You eat more at home. You'll stop buying as much clothes. Maybe you start thrift shopping, or just stop shopping altogether and only buy things when you need it. And when you do buy it, you use cash instead of credit cards. Credit card gives you a false sense of security and gives you a false sense of money. A lot of people are charging things to these little plastic cards when they don't have the money. Not a good thing. But that's what most people do. Either way, create that budget, start telling your money where to go, pay off your debt. Then when you start paying off your debt, also remember to stop all investments, stop all 401k investments, stop all retirement investments until you get all of your debt paid off, right? Line up your debt from smallest to largest and you start paying it off. Now, I follow the Dave Ramsey plan where you put $1,000 away for your emergency fund and any other cash. Say you have $20,000 in the bank. You take 1,000 of that 20 and you put it, say it in a separate account. That's going to be your emergency fund. You don't touch it. You take the other 19,000, start paying off your debt. Why do you have a $5,000 credit card bill when you have $20,000 in the bank? Why do you have this outstanding $1,500 hospital bill when you have $20,000 in the bank? Get rid of the debt. So that $1,000 is there for your emergency because they will happen. Your tire may go out, hot water heater, so on and so forth. Either way, create that plan. You have that $1,000 emergency fund. You start paying off your debt. Stop all investments. Then when you pay off all of your debt, now you can start paying all of your, but not paying, but now you can start funding your retirement accounts with 15% of your income. You can fund your kids' 529 college plan. Now, instead of that $1,000 emergency fund, now you can create 3 to 6 months of expenses, of your expenses, and you put that now as your emergency fund, right? And then if you have a mortgage, now you can throw all the extra cash towards your mortgage. I hope that makes sense. But if you don't have a mortgage and you're renting, that's fine. You can continue to rent if you want. But if you want to buy, save up to 15, well, not 15, but 20% of the price of the home or townhome or condo. You place it down on that home and finance it for 15 years. And boom, there you have it. And more than likely, you will pay that home off in possibly 5 to 10 years instead of 15. And then after you're done with that, you can do whatever you want to do. Why not have all control or 100% control over your money that you're working so hard for? Why are you working and you don't have enough to pay your bills? You know, no one's coming to save you. You have to look at that person or that reflection in the mirror that comes back at you, like the one that I see in this camera here. That's the only thing that's going to save me. I have to put forth some effort. But either way, you get the point. So create a budget. Get out of debt, people. So I'm going to end this video. So like, comment, subscribe, share this video. Let me know what you think, if you think anything at all. I actually feel better now that I've done this video because I've been trying to make it a point to do these videos as often as possible. And I may stop at the end of this year with these videos. I don't know yet, but I'm thinking about it. So yeah, have a great weekend. Peace.